All right, guys, we get back after here tonight. Boy, it's Monday evening already. The weekend just flew right by. Hope the dads out there had a great Father's Day out there. But it's time to get back to work, though, right? It's Monday evening, June the 21st, 2021. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me because my job tonight is to get us ready to find the best trades for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys tonight. Charts are all ready in the background. As you can see, got the S&P ready, Nasdaq's ready, gold is ready. Glad to see you are ready right along with us. By the end of this video tonight, you'll know my favorite trades for tomorrow. You'll also know some things to avoid to hopefully keep you guys out of trouble tomorrow, whether you're trading on your own or you're trading with us tomorrow in our trade room. Got a lot of great trades on my radar. We had a runaway day today on the S&P, a nice, beautiful spike in channel on the Nasdaq, and a double range environment on the gold, right? Multiple ranges there on the gold. Lots of great trades. Buying pullbacks on the Eminis, fading breakouts and trading rotation on the gold. Again, by the end of this video tonight, you'll know exactly what trades to look for tomorrow, and you'll hopefully be right along with us tomorrow morning in our trade room. Now, before we jump in, though, and get this party started, as always, I want to make sure to remind you, make sure you subscribe to our YouTube channel. You know, I publish this video newsletter with my best trade ideas for the following day. I publish this every evening on this YouTube channel, so make sure you subscribe, hit the little bell icon so you always get notified every time we publish something new. And if you guys have any questions, drop those questions for me in the comment section. I would love to answer all of your questions, and as always, I appreciate you guys tuning in every evening. If you like this video as much as I enjoyed making it for you, do me a favor here, hit that like button, that thumbs up here for us on this YouTube video. So really appreciate you guys carving some time tonight here, but time is ticking. Let's get this video going here. Looking at the charts here in front of us as we go into tomorrow, that of course is Tuesday's trading session. Like I mentioned earlier, lots of great trades on my radar here. Strong move up on the E-mini. Would love to buy some pullbacks on the E-mini. Nice, not as strong on the Nasdaq, but a nice spike in channel on the Nasdaq. Would love to buy some pullbacks on the Nasdaq as well. And again, we've got this kind of tale of two ranges right now on the gold. Now, you know me, whenever we see two ranges on the chart, I always get kind of excited about these double range environments. I would love to buy some pullbacks. I also wouldn't be afraid of buying some really deep pullbacks, some breakouts, and dare I say, trade the short on the rotation back down to retest the opposite side of that pendulum swing. I know there's a lot on that, so not to worry. I'm going to go over all the details on that gold chart for you. There's a lot of great setups I'm tracking really across all three of these markets here for tomorrow, between the S&P, the Nasdaq, and the gold here. Before we jump in, though, to these charts individually, though, let's just make sure we're all on the same page for tomorrow because, of course, tomorrow is another busy day in the markets. Now, we've got Tuesday, Wednesday, Thursday, Friday, of course, in front of us. Going to be a relatively busy week. As we look at tomorrow, the big news tomorrow morning, of course, is that existing home sales number at 10 o'clock Eastern time. However, though, what they don't show you on this calendar is that tomorrow, I believe it's at 2 p.m. Eastern time, we're going to hear from Jerome Powell, the head of the Fed here in the U.S. He'll be talking, I believe, in front of I believe it's the COVID response committee or something like that on Capitol Hill. He'll be talking about the Fed's response to the COVID, pandemic. Now, he just released his text transcript, so the world already knows what he's going to say tomorrow. So I don't expect that to be too big of a deal, but be aware, tomorrow 2 p.m. Eastern time, if you are trading tomorrow afternoon, there is that 2 p.m. Eastern time. Again, he'll be in front of the cameras tomorrow, but again, everything he'll be saying tomorrow has already been published. So it's tough to tell how much he will really impact the market tomorrow, but definitely be aware of that. He'll be testifying, about the Fed's response, right, the monetary policy response to COVID tomorrow, 2 p.m. Eastern time with Powell. So those are kind of the two big events for tomorrow. The one for the morning session, that home sales number, is going to be a very important one because in case you've been living under a rock the past year, right, all the housing prices have really skyrocketed. The Fed has been telling us for weeks now it should come back down again. I will definitely be one person that will be watching closely tomorrow at that 10 o'clock Eastern time to see what that news comes out, and most importantly, how the market reacts to it. But 10 o'clock Eastern, 2 p.m. Eastern time tomorrow, that is definitely going to be on my radar for some of the most important times to be at your desk tomorrow morning. And don't forget, tomorrow morning, 8 o'clock Eastern time, we'll be in our trade room. I would love to have you there trading this stuff right along with us. I'll put all the membership links you guys need right in the description of this YouTube video. I would love to have you there tomorrow morning, right, and trading right along with us. Now, before we get back to our charts here, I will not be publishing my newsletter on Thursday night this week, all right? So please keep it in mind as we go later on this week. I'm going to be out of the office, unfortunately, on Thursday evening, so no newsletter on Thursday. So it'll be Tuesday and Wednesday, and I'm going to talk more about, we get a bunch more news coming here this week here. We got inflation news on Wednesday, GDP on Thursday, more inflation on Friday. So again, no newsletter from me on Thursday evening. So just make sure you get a market calendar on that, and we'll talk more about news here as we go into the rest of this week. But tomorrow morning, 10 o'clock Eastern, 2 p.m. Eastern time, and again, hopefully I'll see you tomorrow right at the opening bell at 8 o'clock Eastern time in our trade room. Let's get back to our charts here right now. S&P, it's a runaway market on the S&P. There are really, boy, I'll tell you, there are three basic kind of techniques as far as buying the E-mini right now: buying breakouts, buying shallow pullbacks, and buying deep pullbacks. You know there is a lot of FOMO in the S&P right now. I'm going to come back and talk more about that in a moment. The Nasdaq is very similar, right? Breakouts, shallow pullbacks, deep pullbacks. Let's start with that gold though first, right? Let's start with the yellow metal, the GC here. This is a 1500 tick chart on the yellow metal here this morning, right? 1500 tick chart on this gold here for today. What do we know about the gold? And I start here because there's a lot going on this chart. And I think not only is there some great opportunities for us tomorrow, but I think you can also learn a lot from what's happening on this chart here tonight. What do we know about this market right now? We know, first of all, there was a very strong move higher, and they just retested that high. If you remember our trade room, we call these open loops, right? So the bulls definitely have control, but we're sitting right at a major high right now. So I have to either A, get a pullback, right, to support levels, or I have to get a breakout, right? That's kind of the main point of this market or this chart right now. We're definitely bullish. Had a strong run higher there earlier this morning. The buyers came back. They retested that high. We're sitting right at that high now. You could also, of course, say it's a measured move up top there as well. But you can definitely tell, right? We're sitting at some major area of resistance. So right away, that tells me I need to either get a pullback, right, to buy at a lower price, or I've got to get a breakout, right, as we kind of confirm this market goes higher. That's kind of one of the most important things to keep in mind. The second thing is we have two ranges, right, on this chart. Let's start with the first one. The first range, I think, really tells the whole story, right? The first range on the chart is, you'll notice what happened. The market breaks above the range, and you'll notice I measure the amount above. Well, the amount that we go above the range will typically come back below and take out the other side of that range, right, before the price goes back up. What happened in this example? It didn't get anywhere close to that area, did it? What does that tell me? It's a very bullish clue, right? We call that failed rotation, right? This is a pendulum swing. We expect to see the market swing back in the opposite direction. So now we've got a couple clues now. We know we're bullish, right? But we know we're also, that's a very bullish clue because of that failed rotation. Okay, that's why I think that first range is probably the most important clue here on this chart. But now we have, if you look at it, another range overhead. And remember, ranges act like magnets. So we're very, very bullish right now, right? Again, we've got that, that failed rotation. We know the buyers have control. I have two magnets right now, right? We're literally two magnets here on this chart. I would normally be looking for that deep pullback all the way down to the other side of that range, but we already saw that's not happening right now. So in that case, I would love to use this range below us for the pullback. Right, so three clues you could say. One is we're bullish. Two, the failed rotation says we're really bullish, right? Something's going on here. And the third one is those two ranges, right, will oftentimes trade back and forth, right? Back and forth, because again, they basically act as magnets. If you look at a volume profile of this right now, you'd probably see a lot of volume there, a lot of volume there, right? A little bit of volume down there. They'll try to fill in that area right here for tomorrow. So a lot going on this chart, right? Lots of bullish clues here. How do we trade this stuff? Well, I'd like to buy a pullback, as I mentioned earlier. I have a good amount of evidence right now that there is a lot of bulls in this market, but I don't have a lot of evidence that they are very aggressive with it, right? You'll notice here, they're not buying very high here. So my first kind of favorite entry on this, kind of knowing all these kind of moving pieces here right now, I don't want to buy high, but I'm open-minded to getting relatively aggressive, right, on this pullback. So I want to draw. You'll notice that kind of channel off that high, channel off that low. I'd love to buy this shallow pullback off of that low. Using this range, not so much like a magnet, but almost like a support level at that point. Again, you're expecting it to want to rotate back and forth from one magnet to the next. I'd like to buy that pullback. And to do it, I got to be careful because I don't want to be buying into that overhead resistance. How do we do that? We need to use what I call a trap entry, right? Traps are always going to be, at least my favorite, whenever I'm concerned, not about direction, but about location, right? And that's my concern right now. My concern is not direction. My concern is not momentum. My concern is simply I don't want to buy too high here. So what I'll do is I'll let these bears pull back here and be looking for that trap entry. So my first kind of favorite trade here is to buy the shallow kind of the shallow pullback trap, if you will, right? Trap entries there. Now, don't be surprised if this does something like this, like a V bottom, right? Where what we'll do is it'll snap up and go higher here and jump. If that happens, just wait for those traps. Right, you see an example back here, right? We oftentimes see V bottoms. They'll V bottom off that low. There's that trap right there. See it over there? That's kind of the same thing. We may get that right over there again, right? So watch that V bottom. Again, shallow pullback, trap. That's going to be again, that's the way I'm going to trade this thing on a shallow pullback. The next scenario is what if we get that full rotation, right? What if we roll all the way back down, either the low of that triangle, expanding triangle, or that pendulum swing? Remember now, this is a range, right? So ranges, of course, they're magnets, right? Now, you could also look left here and say there's a big range right over there as well. So if we can swing back down around, I know it will seem very scary at that point, but I'd like to be a buyer going back up into that trading range. Again, ranges act like magnets. So how do we trade that one? That one's going to be a little bit different, but it's going to be very similar because if I can get this rotation all the way back down, and I'm sure right now you're wondering, can we short that? And yes, we can, and I will talk about that in a second. So stay tuned for more on that. How do I buy off that low, though? Real quickly here first. Again, it could be off of this trend line. It could be off the pendulum swing low. That all works down there. What's my problem, though? Momentum is my problem. So if I get down around those lows now what I want to do is I want to look for the bears to try twice, right? Try once, try twice. Now, again, this could be here. It could be here, right? It really could be any of these support levels. We're using the range above us as the magnet again. I'm waiting for the bears to try a couple times. Their stops are now sitting right above that high. And I can now literally buy right into those stop losses. Now, between you and me, one of my favorite follow-up trades, strong move right after that failure, right? We're buying into stop losses, right? Literally buying into stops with that failure setup. One of my favorite follow-up patterns is to mark a trend line off that high, a new hidden channel off that low, and then grab that first pullback. All right, repeat after me. The first test is the best test, right? That's the test you want. You want that first pullback coming in off of that low. Now, keep in mind, this is a 1500 tick chart, again, on the gold, right? I'm not going to take that entry on a 1500 tick chart. What I'll do is I'll drill down to a 377 tick chart and find entries like trap entries, pullback entries, failure entries. Now, I'm not going to go over all the smaller, faster time frame entry techniques that we use in our trade room, but I do go over all those details as part of our quick start trading course here at School of Trades. What I would definitely do is, if you want to get more of a deeper dive into how we find the levels of support and resistance, determine which entry patterns to use, how to trigger the entries, which ones to take, which ones to avoid, I cover all that small stuff in our quick start trading class. I'll put a little pop-up there for you in the upper right-hand corner. You're going to love that class, right? So definitely grab that quick start course. It'll take you a few days to get your bearings and be trading like we do right in our trade room. So definitely grab that quick start course there in the upper right-hand corner if you want to learn more about that. So again, deep pullback. Right? Deep pullback. We're not trying to sell down here, right? Not trying to sell down here. I want to see 1, 2, and we'll try to buy it right back up again. That's another one here, right? I can buy. Now, another buying opportunity would be a breakout, right? Going higher here. Let's not forget though where we are, right? We're just a little bit underneath some major lows. I actually really like the breakout here, but we have to be careful because we have that major top up there. And remember, this could easily be seen as one big range. We could easily go down, up, and then come right back down again. I'll talk about that short, right, once we get to that section here of this video, right? So just be aware of that. So we got to be careful as the market goes higher. If I jump higher here right now, what's my concern? It's not momentum, is it? No, momentum is fine. What's my concern? Location. So when I see a breakout going higher and I've got a lot of resistance up overhead, what's the best entry? For me, it's always a trap. I'm going to use my 2-try trap setup to buy that pullback and finish off that run going higher, right? Finish off that run going higher here, right, as we go. Now, maybe this thing really crushes it and runs higher, right? Maybe we see it jump up. It holds the pullback. It holds the pullback, and we really jump off that moving average. If we really see a lot of strength, right, coming off that moving average pullback, what I'll do is I'll mark up that high, I'll mark up that low, and I'll look to buy that first pullback again, right? It's the same idea we talked about back here, right? Deep pullback, we run up, find that, right? Find that new channel, and again, we'll drill down to a faster time frame, right? And we'll buy that. Again, first test is the best test. So those are 2 breakout patterns, right? And again, if I can get this, if going higher here, my favorite is that trap, right? Because you want to get in before we retest those major highs. If we get that strong run up, but the buyers hold it and they really blast, right? That's a lot of momentum. I don't care about where we are at that point. All I care about now is finding that first entry. Right? Finding that first pullback, I should say. And again, that first pullback could be a bear trap. It could be a failure pattern. It could be a pullback setup. Again, I'll go over my favorite entry techniques in that quick start trading course linked up in the upper right-hand corner for you. I'll go over that stuff, those details in that video class. But for right now, though, now you know kind of what I'm looking for, right, as the market goes higher here now. Now, how do we short this market? What would be an effective way to sell short? There's actually 2 really nice short setups I really like on this chart right now. One is going to be trading the reversal or the rotation back down to that low. And I should say, I'm not looking to trade the reversal, right? The reversal here is going to be a bit of a dangerous reversal. I'm going to go over some reversal patterns in a moment later on in this video, but this is not the spot for that reversal. And the reason why is because of that failed pendulum swing, right? That failed rotation we talked about earlier. It's just too bullish to try calling a top on this. However, if I can get this market to a nosedive here, right? Get that shallow pullback, lower low, and grab a trap, I would definitely be interested in that, right? We call this trading the rotation. I'm not going to trade the reversal, right? I think it's a gamble right now to try to pick a top in this market right now. However, if we don't get that shallow pullback to hold, right? Let's just say the market tanks and runs lower here. Okay, we get that shallow pullback to the moving average, that lower low in price. That is a short I can definitely get excited about. Because at that point now, all of that momentum running lower, they're going to try to take out the other side of that range here. I can definitely trade that, again, that trap. I really like those pendulum swing rotation traps on the opposite side of the range. And again, I realize I'm covering a lot of different techniques right now, so you're going to learn that stuff right in our video classes. So that's the first short right off the high here. How do we go? What do we go long here? The next one would be, let's say we do get that run up to that major top. Then let's say we pull back and the buyers try once, the buyers try twice. Yeah, same basic idea, right? If we can take out these highs, again, that 97.9 high, if we can take those highs out and then see these buyers struggle a couple times, and what you want to see is you want to see lower lows, lower lows, lower lows, right? So we run up, we take out that high, the buyers try once, the buyers try twice. We've got the buyers trying at lower prices now. What I always do is look for a trap above that high, right? Trap short off that high. Trend line acts as, I mean, there are so many ways you can short that. Again, trap is the best. Trend line reversal, or simply sell right into those stops. And then again, mark that low, mark that high. And again, that's the best one, right? First pullback is the best one. First test is the best one. All right, guys, so be aware of that as we go to these highs. What you don't want to do, though, is try to pick a top up here, right? That, of course, is that's a fool's game up there. If we see that strong run higher, pick those traps, right? Pick those traps. Strong move up, shallow pullback, higher high in price, right? Grab that trap. And then once you take those highs out, then one try, two try, back down for that short going lower here. That's the way you want to trade the reversal off that high. And again, if you're here for the first time tonight, definitely grab that quick start trading course right in the upper right hand corner. You're going to love it. It'll bring you right up to speed on all these setups I'm talking about here on this video. All right, gold is all set to go here. Gold, again, I apologize. There's a lot going on the gold right now. Very bullish. Would love to buy a shallow pullback here. We'll see if we get the breakout here instead. Let's grab the S&P next. S&P, one of my favorites here. S&P, of course, is in case you weren't paying attention today, the S&P was a runaway market today. It made a lot of sense, with that big bloodbath move down, that whole bomb that went off, right? The Bullard bomb that went off. The Fed speaker Bullard dropped a bomb in the market. Not literally, of course, right? But figuratively speaking, that dropped the market on Friday, right? Last Friday. And now we get this huge rip, basically running higher. The most important thing on this chart right now is there's no deep pullbacks, right? I mean, look at it. There was literally no deep pullbacks. This whole entire leg going higher, and this is only half the chart, by the way. Right? That's literally half the chart there. But look, no deep pullbacks, right? There were no deep pullbacks whatsoever. And with a retest of those all-time highs, well within striking distance, right? And the Fed saying everything is just peachy keen out there. We're prepared with more stimulus if we need it, yada, yada, yada. It definitely does feel like there could be a retest, or at least the desire to retest the all-time highs here sometime before the end of the month, possibly. So we definitely have that overall bullishness with no deep pullbacks on this chart today. You have to think there's going to be a lot of attention to the next pullback, right, that we get here. This will be a lot like the gold plan in the sense that I've got a couple great spots, whether it be a shallow pullback, a deep pullback. I wouldn't mind trading a breakout, right, going higher here. I got some levels overhead I'm watching, so we'll definitely keep an eye on that. And then I think the only kind of variable for us tomorrow is this range you can see here, right? That range right there in the middle. Now, there have been range here. I mean, this is not the first range we've seen today. So, don't let that range, fool you into thinking this may not be going much higher here. We definitely do have a bull market right now. But that range is something I'm definitely watching here. Now, again, I don't want to buy way up here. I want to buy a pullback. What you want to be thinking about is pretty much this spike in channel, another very big clue in this chart. Spike in channel pattern, of course, always a very good clue. Whenever I see a spike in channel, what's the first thing I think of? A deep pullback into what? The base of that channel, right? Deep pullback into the base of that channel. If you traded gold last Friday, right? Gold, that big pullback last Friday, right up into the base of that channel. So the ideal pullback is down inside this area for tomorrow, that 4,200, let's say 4,200 to 4,195. That's probably the best possible pullback that we could hope for tomorrow. But I mean, come on, with the all-time highs just begging to be retested this month, bunch of big bull moves today, it might be unrealistic for us to think we're going to get that deep pullback right here for tomorrow. That's why I want to be ready for those shallow pullbacks along with those deep pullbacks here. And again, right, if the market does keep going higher here, I'll be ready for some traps, right, as we go higher here. So a little bit of this will sound a lot like gold here in the sense that I really want to get a relative, some sort of pullback here. I'd rather not just buy this little shallow guy, but honestly, if we get the right setup, we should be okay with it. What I would like to do is get this thing down into that 4205 area. It's not the ideal pullback I'd like to get, but at least it'll give me something to get my hooks into. Now, on that point, what's my concern? My concern is we're back below this measured move resistance. We're definitely bullish. There's no doubt about that. Momentum is not my concern. It's location that's my problem. And whenever it's location, that's when I look for traps, right? So traps are going to be, I'm looking for here on the S&P, a shallow pullback trap. Now, I got to be honest, right? I wouldn't shy away from a trap low there, 1 and 2. That's not a horrible trade, but it does seem to be more on the aggressive side here. If we went a little bit higher and then got that pullback, that would be a different story, right? But as for right now, though, I'd like to get down to that 4205 area, 4204 half area, get those bears, right? Get them here to try. And again, I'd like to get that trap entry. I mentioned this earlier on the gold, right? If we do see a V bottom like this, just stay patient, right? Just stay patient. V bottoms are one of the most difficult conditions to trade there. Just stay patient for those bears. Try a couple times and grab that trap low. Chances are you'll get that trap if it V bottoms right off of that low. So my first kind of favorite trade on this S&P would be buying that shallow pullback trap, right? The next one is really what I think everybody probably hopes for. That is a pullback down into this 98 right to 93 3/4. Now, that's not going to be a small pullback. It's not going to be a small pullback, right? If we get all the way down into that, sub 4,200 area here, that is going to feel relatively strong. And a classic case of a spike in channel is by the time you get down to the base of that channel, it will feel like this market has reversed. But again, all-time highs are still waiting to be re-hit. Not a single deep pullback today. So you got to really question, right, whether or not this thing is reversing. I will be looking for this moving average to come over, get these bears to try a couple times down here. And remember, there's a couple different ways you can take this trade, right? The easiest way is let those bears try twice, think about where their stops are, and just simply buy right into those stop losses. It's one of the easiest setups I can teach you as a client here, is that let those bears, again, deep pullbacks, great. Give the bears a couple shots, right? Let them try a couple times and buy right into those stop losses. Another easy technique is draw a trend line off of those higher lows, right? And buy off that trend line. That's one of my favorite ways to do it, right? That'll get you in a little bit earlier. And then remember, find that channel high, mark that channel low, and grab that first test. Right? Grab that first test. Now remember, this is a 6,000 tick chart. You can see in the upper left-hand corner, right? This is a 6,000 tick chart on the S&P 500. I'm not going to take the pullback, obviously, on that 6,000 tick chart. I'll drill down to a faster time frame, like a 1,000 tick chart, and I'll look for kind of the typical entries you see in that area will be those failure into pullback combinations, right? Failure into pullback combinations around the moving average. Again, I'm not going to go into more details of that. This video is already long enough, but I do cover all of those key components to actually how to trigger the entry, the rules we use, when to take them, when to skip them. I cover all that stuff right again in that quick start trading course that's linked up in the upper right hand corner, right? So again, shallow pullback trap, right? Shallow pullback trap, deep pullback, nested or two-try failure setup as we go right into that, again, into that first pullback off of that low. And, I will say too, that V-bottom technique, if it was to run lower and right back up again, right, would it surprise you? It wouldn't surprise me. That V-bottom technique can absolutely be used in that environment as well. Right, this is obviously going to be a little more extreme, where a market, of course, runs lower. There could be so many buyers down here that are waiting to buy that pullback. It just shoots right back up again. The key is don't chase it, right? That's the key. Don't chase it up here. Professionals will be waiting for that little shallow trap, right? Little trap low there to make sure they're getting in with a small risk and a big reward. And then don't forget, you can oftentimes draw that trend line off those highs, off those lows. I know, right? That's where the gold is right there. That's where the money is right there, right? Where those traps off the low of those channels as the market snaps right back up to retest the high. So again, deep pullback, right? Deep pullback failure. Now, how do we trade the breakout? How do we trade this breakout? Now, first of all, before you trade the breakout, where's the market trying to go? Yeah, the market's trying to go where? We got the all-time highs up top. And I think an easy way to look at it would be this area right there, this kind of 42.40 area, 42.35, 42.47. This lines up nicely with some ranges over there. If the market keeps going higher, I would assume that's where this market is trying to go. Now, not a lot is different on the S&P than it was for the gold, in the sense that if we do go higher, there are two basic kind of breakout patterns that I like to use. One is that 1-2 trap. Right? We call it two-try traps, right? Strong move up, shallow pullback, right? Strong move up. The key is the strong move up, the shallow pullback, and the higher high, right? The higher high is what gives that trap the real edge, right? Because the shallow pullback doesn't give everybody a chance to get in, and the higher high just kicks up the FOMO, right? It kicks it up a little bit. So when it comes back for that trap now, nobody misses that entry, right? And hopefully you won't miss it as well. And again, you can always draw a channel off that high, off that low, and that really increases your odds of success. Another one here would be that, let's say we don't get a strong move up, but they simply pull back and jump off the moving average. Now simply mark up that high, mark up that low, right? Find that new hidden channel. And remember, we drilled down to a faster time frame here, right? It's going to be bear traps. It's going to be seller failures. Failures oftentimes turn to pullbacks, into strength moves. Again, you'll learn all that terminology and a lot more as part of that quick start trading course, right? I keep talking about. That'll bring you right up to speed, so you'll know exactly what I'm talking about here, either in our newsletter video or in our trade room every morning at 8 o'clock Eastern time. So those are the two breakout patterns as we go higher here. I would also caution you too to keep an eye out for a range. Would it really surprise us if at some point tomorrow, after such a big move up today, with Powell speaking tomorrow afternoon, would it really surprise us if the market started going sideways? It shouldn't. Anytime we see a really big move today, there's a good chance tomorrow could be a range. Right now, it looks like this market may have some more teeth left in it to keep going higher here. But again, remember, anytime you see a big move today, oftentimes the market has to kind of tread water the following day, and oftentimes it will start to go sideways here. What do we do in that situation? We find levels of support below the range, and we combine those levels with failure patterns. Failures are the most common setup you'll see in ranges because the range acts like a magnet. So just wait for the price to pull back, wait for the bears to try to get short. You know where their stops are, and just buy right into their stops. It's one of the easiest pattern setups you can use. You got to make sure you use it in the right direction, right? You want to buy off support below the range when the bulls have control. All right, guys? Now, so we got a pretty good idea, right? If we keep going higher, if we go sideways, we know what we're doing. Now, how do we short this market? Because this market could easily tank, right? Anything's possible. There's no reason why this market couldn't pull a U-turn here and run all the way back down again, right? It happened on Friday. It could happen again on Tuesday at this point. What would be some ways I could short this? There are really two kind of basic techniques to get short in a trending market. One is a reversal and one is a failure off the high. So let's say, for example, we get that pullback, right? And the buyers come back up. They retest the high, right? We get our nice entry off the low, and now we're back up kind of like gold is right now, where it's right at those highs, right? At that point now, the buyers have got what they want. They got their pullback. They're not going any higher now. Now we start to look for exhaustion. We wait for the buyers to try once. We wait for them to try twice now. Again, the key is 2 tries with lower lows. Look at it this way. Buyers want to buy low, right? They want to buy low. So as they pull back, buyers try once. Oh, that didn't work. They'll try it again. Now, at this point now all the buyers are in, and all their stops are sitting right below these lows here now. Okay, bunch of resistance now up overhead. I have a trend line coming down overhead. You can start to see now kind of where these entries will come into play. Trap entry, for example, right? Traps are always great. Trap right above that high, right? Trend line entry, right? Off that trend line. Or, of course, just simply leaving that short order to sell right into those stop losses as the market rolls lower. Now, notice I am not trying to pick a top right now. That is probably the most important part about this, right? Because we have all of this strength, right? We have all of that strength. It'll be very dangerous to try to sell this market right now. What I'd like to do is grab that pullback, right? Retest those highs and then look for the short, right? After, again, let the buyers retest the high and then sell off that high. That's the safe way and the consistent way to make some money off that, right? Off the reversal. We can pick the top in this market. We got to be very, very careful though when we do that, right? All this momentum, trying to pick a top right now would be very much a gamble on this market. Now, maybe I'm wrong, right? Maybe the market does tank. Maybe it does make a strong run lower. And maybe the bears are strong, we think, and they hold that pullback and they go. What do we call that? That's called a 1, 2, 3 reversal pattern. What do you do in that situation? Do you sell down here? Of course not, right? We don't want to sell low. We want to sell high. Mark that low. Mark that high. Remember the old saying, first test is the best test. First test is the best test. That's the one that you want. Now remember, I'm not going to sell the first pullback. I know it's very tempting. It always looks very obvious in hindsight. I get that. But I'm not going to be able to sell that first pullback. That's why. Because the first pullback off the high here, there's a good chance it comes right back up and hits that high again. Okay, the odds are very much on the side of the buyers there. But if we can get that deep pullback, and if the buyers, or should I say the sellers, right, get their act together, hold that pullback and jump off the moving average, now we've got that 1, 2, 3 reversal. We can mark that low. I can mark that high. And again, I'm looking for, on a 1,000 tick chart, right, I'm drilling down, looking for trap entries, looking for failure entries, right, pullback combinations. And where do you think that target is? Yeah, back to that range. We pretty much started the whole day today, right? Back around that 4170 area. That would be an easy magnet here for those bears. So guys, lot we covered here on the S&P. Not to worry, right? We're going to do this tomorrow morning in the trade room. So make sure you be there with us tomorrow, 8 o'clock Eastern time. Ready for the Nasdaq? Let's wrap this puppy up. I know you're anxious to get to the Nasdaq. The Nasdaq is going to kind of wrap together a lot of what we've already talked about tonight on this video. So hopefully you've been paying attention here so far. What's the big takeaway right now on the Nasdaq? Well, the bulls have control. And you can definitely tell these bulls are relatively strong because there's a range up there. Remember, what is a range? Think of a range. Well, what's the best way to say it? Anytime I see overlapping candlesticks like this, it's basically the price action telling us that price right there. This area is the kind of it's what is deemed as the correct price of this market, right? That's why ranges are there. Ranges are created when the market loves trading at that price, right? Buyers and sellers are both agreeing that's the price. So when you see a bull market like this into a range, you know the market's telling you this is the price we like. Right? So if it goes down, we're going to buy it back up. If it goes up, we're going to be careful. Because a lot of times, right, like back here, it'll look very convincing, come right back down in. That's why ranges act like magnets, right? Those overlapping candlesticks, you don't need some special indicators for this either, right? Just look for those double tops, double bottoms, the moving average flattens out here. Again, I go over finding ranges in a lot more detail in that quick start course. I keep mentioning in this video. So we know we're bullish. We know, right? We know we've got a big old range up there, which acts like a magnet. We also can see we're pretty much right at those highs, right? I mean, let's face it, we're bullish, but it's a lot like on gold, right? It's a lot like gold where we're definitely bullish, but between this high and that high and that high, I'm a little bit hesitant here to just to buy it as it goes higher here right now because we might get that nice deep pullback. Now, speaking of pullbacks, we've got two components here on this chart. One is the trading range. Okay, what does a range tell me to do? It says find support levels, right? Find support levels. You can put this one on there too. Find support levels. Got a bunch of them, right? Stack in there, stack in there. Find support levels underneath that range and do what? And use those failures, right? So imagine now a failure pattern, right, coming off of that low. Okay, that would be one way to trade it. Another way, right, or another kind of piece of this puzzle is this spike in channel. Now, we talked about spike in channels earlier in this video, didn't we? What does a spike in channel tell us? Spike in channels, what do? You buy the base, right? The base of that channel. Okay, not as dramatic as the S&P, but same general idea. So the range gives us the clue. The spike in channel gives us the clue. And of course, we want to buy that pullback. Right? Now, a lot like the rest of these markets here today, I've got to stay out of trouble inside that range. So think of it this way, right? A shallow pullback with a trap, right? A shallow pullback with a trap. Why? To avoid the middle of that range, right? A deeper pullback with a failure, right? I'm not worried about buying into that range anymore. I wait for that pullback. I wait for the bears to get short. Their stops are sitting right there. We can buy right into those stops, right? Target is where? Pendulum swing, right? Pendulum swing. Mark up the amount below, equal the amount above. We talked about this in the gold, right? So kind of combining a lot of the techniques we talked about so far already. Shallow pullback trap, deep pullback failure. Now, it wouldn't also surprise me because you might be looking at this chart right now going, wait a second, Joe, isn't this a range over here? It definitely is, right? It is and it isn't. The reality is we have two bottoms, but we don't have two tops, right? So it's like a range. It's almost like a range, but don't confuse this. The range is right there. That is the actual range that you want to use. But would it totally shock me if this was seen as like one big range, the market went all the way down again? Could I buy that too? Oh, I definitely can. But what's the problem? Momentum, right? Deep pullback, let them try once, let them try twice. Yeah, see, now you're getting it, right? Now you're starting to get the roll of it, right? Shallow pullback trap, modest pullback failure, deep pullback, right? Two try failure. And again, grab that, right? Grab that channel. And again, first pullback off of that low. Again, we can blend a lot of the techniques we talked about already in this video into this Nasdaq here right now, right? Shallow pullback trap, deep pullback failure. Now, as we go higher, what's my concern going higher? Not momentum, location. All-time highs are right there. I think you could probably also easily say another measured move is right there, right? So, I mean, you definitely can't deny that. So I have no problem being a buyer up here, but as the market goes higher here, what do you want to look for? Traps, baby. Why? Because you don't want to buy too high, right? Traps are going to be at a premium as this thing goes higher because everybody wants in, but they're not going to want to buy right into those all-time highs. Okay, so traps we go. Or let's say something happens here overnight. The market runs up, right? Takes the all-time highs and says, I'll raise you, right? We're going to 15,000, right? They blow right through those all-time highs. There you go. Mark up that low, mark that high, mark up that low. And again, if we have enough momentum going higher here, I'll simply buy that first pullback, trap setup, failure setup, pullback combination. You'll learn the entry techniques keep talking about in that quick start course, right? Linked up in the upper right-hand corner, right? So buying as we go higher with those breakouts. Now, how do we sell this market right now? Can I short this thing? You definitely can, but like any other bull market, you've got to be careful. Probably the most reliable short for tomorrow will be a 1, 2, 3 reversal pattern. That is a strong move down. The bears, right? The bears do not, right? Sorry, the bulls are not able to get their failure back in. What happens? The bears hold it, right? And we make a run for it. If we make that run, where do you think these bears are trying to go? They're trying to take out those lows, right? What do? Mark up that low. You got it. Mark up that high. First test is the best test, right? First test is the best test off of that high, right? Sell that 1, 2, 3 reversal. 1, 2, 3. Again, no way I'm taking the first one. I wish I could trust the first one, but you can't trust the first one. You got to wait for that next one. And again, this is a 4,000 tick. You'll drill down to like an 800 tick on the faster time frame and grab those entries right off of those highs. Right, definitely looking at a reversal going lower. Let's say also too, the market dumps. Right, it tanks. Strong move down. Shallow pullback, right? We're just running. Something's wrong, right? Something's wrong. The market's collapsing, going lower. Do you chase it? No. Traps, right? Traps. You don't have that 1, 2, 3 channel yet, right? So traps are your only option. And you want to get that before we take out those lows right here at those major lows for tomorrow. So all-time highs right above us here. Shallow pullback traps. Breakout patterns going higher here. Should be a great day tomorrow on the Nasdaq. We'll see what happens overnight, update our charts accordingly, and we'll do it together tomorrow morning in our trade room. Speaking of tomorrow morning, by the way, in our trade room, don't forget, 8 o'clock Eastern time. I would love to have you there right there with me. Now you know my plan for tomorrow, so you're ready for trading tomorrow morning. I would love to have you there with us tomorrow morning, 8 o'clock Eastern time. I'll put all of the membership links you guys need to put those right in the description of this YouTube video, so don't be afraid to grab that. Get registered either for the free course, right, or membership here tonight. I would love to have you there with us either way. In the meantime, don't forget to call the office if you guys have any questions. I would love to answer all your questions. Live support on the left, live support on the right. And guys and gals, hope you guys enjoyed the video tonight. Hope you learned a bunch. Hope I'll see you tomorrow. We can trade it together. If not, you're ready for tomorrow, no matter what happens here, both up and down or sideways right here in these markets for tomorrow. Don't forget, no newsletter on Thursday evening. It'll be a relatively short week for the newsletter here for me this week. But as always, we'll see you guys tomorrow, right? Same time, same place, 8 o'clock in the trade room. If not, I'll come back and see you guys tomorrow night, same time, same place, on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.